So you should...
Okay.
Thank you for joining us this afternoon for our Fintech 101 session. We will be starting the program in just a few moments. We will just wait a few moments to allow attendees to enter the space. Thank you. Thank you for joining us for today's session on Fintech 101. We will be starting the main program in just a few minutes. We'll just give our fellows a few moments to join the room before we kick off. Thank you. Well, welcome everyone. Thank you so much for joining us today for this session on Fintech 101 with Lindsay Luppnow. We will be starting the program in just a couple of moments. We'll just give some time to allow people to join us before we kick off. Thank you. So let's start there. Good afternoon, everyone. Thank you so much for joining us on this Wednesday afternoon. Today we are going to be discussing Fintech 101, which is our introductory session to the fintech space. Before we get started, I would just like to draw your attention to the Q&A function today so that you are able to ask questions as we go through today's material. So if you're not already familiar with the Zoom function, you can see there is a Q&A function at the bottom where you can submit your question, and these will be addressed at the end of the session. So without further ado, I would like to both welcome you on behalf of the Mauritius Africa FinTech Hub. My name is Lisa Desoy. I'm the head of skills here at the Hub. And I'd like to thank you for joining us this afternoon for this introductory workshop on the fintech space, in which we will be exploring what exactly fintech is and the current trends for the sector, where things are going in the future, and the global impacts that fintech is having. I'm very excited today to welcome our presenter, Lindsay Luppnow. And Lindsay is joining us from South Africa this afternoon, but she has many ties with the island of Mauritius. She is a South African qualified attorney and legal consultant who specialises in banking, fintech and contract law. She has practical experience working with international startups, fintech and adtech companies. And she now has her own consulting practice based in South Africa, where she specializes in legal, offshore, and business advisory services. And that business is called YBR Services. So please join me in welcoming Lindsay. And we look forward to learning a bit more about what this fintech game is all about. Thank you so much, Lindsay.
Hi, everyone. Firstly, let me just take this opportunity to thank you all for attending. It's really exciting that you are have taken this time out to increase your knowledge base and learn a little bit more. And thank you, Lisa, and to the Mauritian African FinTech Hub for this amazing opportunity I'm really, really excited about what's happening in FinTech at the moment, and it's a really nice time to really get tackling into it right in the beginning of the year. So FinTech 101, let's get acquainted. As Lisa said, I'm a South African admitted attorney, specialized in my previous practice with banking, contracts, and property law. I have separate entrepreneurial experience. I've run a separate business for 6 years. I lived in Mauritius since 2017, but now I'm back in South Africa. I work with an award-winning Mauritian registered fintech startup known as Demise, who's also a member of MAFH. And I've just launched a legal business and international structuring consultancy in South Africa. So my clients currently include fintechs, adtechs, companies, and then private individuals as well. I do have some formal fintech qualification from the Side Business School at Oxford University. So there is a little bit of, there's a validity behind and a formal qualification behind my experience as well. So I just want everyone to obviously make sure that they understand that this is completely an introductory lecture. The basics, what we want to really get into is the basics and the understanding of fintech. So we want to discuss real world cases and what's happening, consider innovation, especially moving forward. You know, often when even meeting with senior executives, I don't always presume that everyone knows all the terms, because often these abbreviations and terms are thrown around and people don't understand the meat and bones behind it. So we really want to tackle that today. So the goal is at the end of this session is for everyone to leave with a key understanding of the phrases and what it will mean for you in your professional role, whatever that is, and also about our futures in general. So, you know, fintech is this cool word that's thrown around, basically short for financial technology, but what is it? I mean, for most of us right now, we have fintech right in our pockets or on our desks next to us, because if you're using a banking app or you're logging onto the internet to do your online banking, you've paid with a QR code, you are using some fintech. And if you think in your daily life how much that happens. So it's not something that's far away, it's something that's around us all the time. It's infiltrating every aspect of our lives, even more so in the last year because of COVID and lockdowns, etc. So all these buzzwords are thrown around, and hopefully at the end we understand them all. So basically, what is fintech? It's disruptive. So it means that it has interrupted something that previously existed in a clear and definitive way. So there's a way of doing things, and now there has been a break and there's a change. The technology, it can either be software or hardware, so the development of apps in the form of software, for example, or hardware in the form of like a mobile payment device. So there's various different aspects. And then we also, fintech provides innovative solutions, so a new way of doing something that was done a different way before. The main goal is to improve the existing financial services, so which a lot would describe as old and clunky and outdated. Fintechs are actively working to improve and make things easier and quicker. The solutions can either be for a customer or it can be for business. So a fintech startup, for example, may set up an app that they will target clients with to make payments, for example, or they may create a software solution that they can sell on to other businesses that then can provide the services. So there's to customers or B2B. And it's constantly evolving. So the fun and the exciting part about fintech is what's relevant today will just be taken for granted tomorrow. What's cutting edge now, tomorrow is just considered everyday, part of our everyday lives. So there's an evolution of fintech. Everyone thinks fintech is a new buzzword, but in fact, it's actually been around since about 1858. So what a lot of the experts are doing, well, what they've done is broken it down into different chapters, depending on what the focus has been. So Fintech 1.0 was basically a focus on infrastructure. This is when there was real financial globalization brought around by the use of the telegraph, railroads, and steam ships. It was the first time that there was rapid transmission of financial information across borders. Before, everything had been very, very centralized. So in 1858, there is the transatlantic cable, which is invented, and it connects the Americas to Europe. For the first time, there is a speeding up of trade and communication between the continents. In 1918, FedWire allows for the first ever electronic fund transfer system. As early as the 1950s, we just take this all for granted, but the first widespread credit cards were released from Diners Club and American Express a few years later, but that's relatively recent. Then we moved to a new sector, which would be called Fintech 2.0, where there was a real focus on banks. This is approximately from 1967 to 2008. There was a move from your analog to digital. In 1967, Barclays Bank releases the first ATM installs for customers. You can imagine the skepticism, the excitement about not having to queue to stand in the bank in long lines anymore. You could just go to a machine, punch in the numbers, and it could give you money. And that's only in 1967, also not so long ago. In the 1970s, you get the establishment of the NASDAQ, which is the world's first digital stock exchange. 1973, you've got the creation of SWIFT, SWIFT stands for the Society of Worldwide Interbank Financial Telecommunications. And it is still today the most commonly used communication protocol between financial institutions. In the 1980s, you get the rise of the bank mainframe computers and an introduction to online banking. In the 1990s, online banking starts to flourish as the internet starts to grow. In 1994, you get the first e-commerce business platform that is created. So it's the first time that this e-commerce business model has existed with the creation of Amazon. And unfortunately, this chapter, things boomed, things were amazing, but this chapter had to end in 2008 with the global financial crisis. This was a clear ushering in of an entirely new sector, which we'd call Fintech 3.0. This was the rise of the startup. This has been running from 2008 until currently. This is obviously after the global financial crash, there was huge distrust in the traditional financial services and banking industries. Bankers lost their jobs and they went out, mind shifts were changing, people decided we need to do something different. In 2009, for the crypto fans, obviously Bitcoin came into existence, which was really exciting. And we're currently, I guess, what you would call in Fintech 3.5, because we're still within the startup phase, but really there's been massive growth of financial services into developed and developing markets. And the role of the smartphone has played a huge part in that, specifically because of the accessibility, because people don't need to have computers. You just have a phone, so there's been a massive increase there. I thought this was really interesting. If you have a look, the number of fintech startups from 2008 to 2018, 2019, pretty consistent. But 2020 was a really big growth year across all areas for fintech startups. This is from the website called Statistica. These are their latest stats. So obviously COVID and the pandemic did a massive service. It saw a massive growth in fintech startups across the globe. Okay, I just want to, obviously, what's important to remember is that anything new, especially because it's rapid changing technology, is not always immediately accepted and adopted. There's often skepticism around new products, new technologies. I mean, you can imagine when the first ATM, for example, I'm sure there were people that were like, I will never use that. I'll keep my money under my bed, or I'll continue to stand in the bank queue. And now at any point you can go to Super U and stand in the queues down in the parking lot and wait for an option of 4 or 5 different ATMs with no worries or concerns whatsoever. You don't even think twice, but that's because of what we call the technology life cycle. So basically, it's what technology and innovation has the growth span as it is accepted. So every technology differs, the timeline differs. So some will spend a lot of time in one phase, but these are the 5 phases that have been identified in the Ghana hype cycle, which the first phase is basically what's called the trigger. So this is the earliest phase. It might even just be an idea that somebody shares. it then starts to grow. Maybe someone puts a proof of concept out and they get some success, and it reaches phase 2 when it's considered the peak. And there's some success stories, interest is peaked, people are talking, you know, they want to find out more. But with multiple uses, there will always be an element of disillusionment, because there will be some sort of flaws or shortcomings that will become apparent with the technology. Then there's the 4th stage, which is called the slope of enlightenment, where the tech becomes widely understood, more accepted, but there are still some uncertainty. So people are still a little bit worried. And then it gets to the final stage, which is the plateau of productivity, where the tech is accepted just as simply mainstream and more viable use cases. The market responds positively. I think a really good example of this is, for example, a banking mobile app. You know, there would have been some people that might have had them hacked over time and things like that. But now it's just pretty much accepted that most people use banking apps regularly. So it's important to consider these trends. Throughout, I obviously always want to hammer home, we need to remember that what is cutting edge today is mainstream tomorrow and taken for granted. So sometimes these new technologies seem scary. You know, there's a lot of skepticism, but as things move forward, eventually a lot will be faded away, but a lot will also be widely accepted. So I wanted to, obviously, because we're looking at FinTech 101, I really wanted to look at the main key technologies that are driving FinTech innovation. So there are certain technologies that have already changed the financial services industry. And these are the ones that I just want to briefly discuss. I mean, obviously, this is a brief overview. So firstly, I'm going to start with artificial intelligence. People will throw around the term AI, but it makes it possible for machines to learn from experience and adjust to new inputs and perform human-like tasks. So basically, computers are trained to complete specific tasks by processing large amounts of data and recognizing certain patterns. It's often used to predict your bank loans, such as your credit scoring, and analysis. So what you can basically, AI would then look at all your different credit scorings, your different rankings, and then the bank will be, can make a decision on a credit loan, for example, much quicker using AI than they would if somebody was manually tracking your patterns, manually looking at all the different aspects before the consideration of the loan. The second factor is big data. AI is reliant on big data because obviously these computers need to look at data in order to be able to pick up these patterns and trends. So big data is basically large amounts of data which are collected, processed, and analyzed. Once it's analyzed, they can pick up certain trends, patterns, and associations. So these work together, and they're great for detecting fraud, determining trends and behaviors. So this will be like a practical application of this is, for example, if you're on your mobile banking app and you get a notification that there's unusual activity on your account, or even a member from the bank phones you and says, we're just a little bit worried, there's unusual things happening on your account. Can you please confirm if there's been fraud or not? I had this happen on my South African bank app the other day. And that would come from the fact that they've taken data on me, tracked what my normal trends are, analyzed those, and then there was something that was going on that was a little bit unusual. So all right, the next aspect, the next key technology that is really driving FinTech innovation is blockchain. Blockchain is also referred to distributed ledger technology or distributed computing. There's obviously, because of cryptocurrencies, Bitcoin, etc., there's a lot of excitement, hype, skepticism, questions that all revolve around what the blockchain is, how does it work? But very basically, the blockchain is basically just a data structure that holds different records, and it secures them in a transparent and decentralized way. Decentralized because there's not one authority, not one bank, not one government that is controlling them. It is decentralized between a computer network. So basically, it's almost like an online accounting system or a digital ledger, which shows all the different transactions being in a duplicated way, and it's distributed across various networks of the computer system. So how one of the tech guys explained it to me a while ago, he said how he explains it to other people in a simple form is if you're using a Google Doc, for example, that you send the link and lots of people can all go and edit that document, and it keeps an updated record of all the changes. And when anybody logs onto that Google document, it will be the most updated form. The blockchain is the same. So lots of people are putting different records on there, but multiple computers in the network are all working together. So the blockchain is really what is behind your different cryptocurrencies. So for example, Bitcoin and Ethereum. All right. Smart contracts. Smart contracts can be written onto a blockchain network. It's really exciting. It's got really exciting capabilities, especially as an attorney, to see what in our industry where things could go with it. So basically, certain requirements or criteria are coded, and once they are met, then the action can be automated and the contract is completed. So basically, there will be certain requirements coded, and once those are achieved, it will release the next action, or the contract will have been executed. So to add extra protection, a lot of biometric information can be included so that you ensure that whoever is completing the requirements or the criteria within that code, it is the correct person. So there are protections in place. Obviously, all of these are huge subjects that we could go on for ages about individually. So these are just the overviews, all right? The last key technology that I really want to discuss is your application programming interfaces. I mean, I sat in loads of meetings way back when people were talking about open banking, APIs, blah, 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 blah. And we always threw around the term API. I didn't even know the full, I knew what it did, but I didn't know the full name. So this is why this is why courses like this are in place, and it's to empower us all. So APIs are basically a software intermediary that talks to two different applications, exists between two different applications to assist them to talk together. So it's often used for companies to facilitate payments via the internet. It basically allows for expandability for businesses, interoperability between a business and a bank, for example. Software, it's the software that companies like PayPal and Stripe use to facilitate their transactions. An example would also be open banking, which I've already mentioned, which is a system under which banks open up their APIs so that third parties can access financial information to develop new apps and services and provide account holders with greater financial transparency and different options. So it's a really, really wonderful way of growing the ecosystem, is having these open banking APIs. But other private companies can also have their own APIs that they allow third parties to access their payment gateways, for example, and they use their interfaces accordingly. One such is Yoko in South Africa, which is a little blue payment processing machine. So these technologies all together are completely changing the way that we save, we pay, we borrow, we make decisions, we manage the risks. So they all are really exciting, but to understand the technologies, it's nice to see them really in practice. So the main areas of disruption and fintech in action is really, there's 5 that I would really like to just have a look at and give you practical examples on. So the first would be your crowdfunding platforms. This is a really, really exciting one, somewhere where there's a lot of forward movements in the Mauritian market being made. Basically, it's a platform that allows either internet or app users to lend or borrow money, to pool funds, to raise capital, whatever it is, instead of having to approach traditional financial providers and banks to obtain loans or funding. This way, private individuals, for example, investors can invest into businesses or projects using the app. So Kickstarter, which has been voted the best overall crowdfunding platform worldwide, is a really cool way for entrepreneurs who have a cool product idea to raise funding for it. So they can launch their product onto Kickstarter, and then they are able to people are able to say, well, I would buy this, and show, and then the company that has put their product on there can then go to investors as well and show that they've got traction, they've got customers, and that the product is desirable, because that is the key. That is the key behind everything, is having a product that people actually want and people want to use. So it also saves entrepreneurs having to put out large capital amounts into getting inventory and things. They can test a concept easily on Kickstarter. And then there's GoFundMe. GoFundMe is more raising funds for a cause. So this is, you'll often see this on like donation sites towards people's, for example, cancer treatments or any charitable. It's like a really good, feel good platform. The website says that they've raised over $9 billion US on the platform, and they've been really amazing. They've got a lot of COVID relief fundraising going at the moment on there as well. So it's a really exciting way to raise funds for a good cause. And then obviously I briefly mentioned, but there's also FunKiss, which is really focused mainly on the Mauritian market. Very exciting platform as well. It means that people and other businesses are able to use the platform to really grow, particularly the SMEs. From what I understand, FunKiss has, from the website, I ascertained that they firstly identified their customers who were SMEs, who were huge contributors to the Mauritian GDP as well as to the employment, but there was a problem. These SMEs and people, companies were having a real problem with trying to get funding through the traditional loaning system. So FunKiss came in, they have a very, very innovative platform, which is really exciting. And now there are loans going backwards and forth all the time. So it really shows innovation in action on the ground in Mauritius, where there wasn't a problem that was identified. There were customers that had this problem, and a solution was found in an innovative, different way to provide them with a good outcome. All right, some more areas of disruption is your blockchains and cryptocurrencies. Like I said, there's a lot of hype around this at the moment, even more so than before, just because of the prices that BTC has been jumping to. But different blockchains really have different functionalities, and there's certain blockchains that are better for certain apps. So depending on the capabilities and the use case, some blockchains will be more suited for particular projects. The Ethereum blockchain, for example, is very popular with developers who want to use the smart contract functionality. So there's it's relatively easy to do that on Ethereum. There's also hypes. Obviously, there will always be around cryptocurrencies, people buying, selling. The regulators always like us. Well, in most countries, cryptos are being referred to as digital assets. So sorry if I use those terms interchangeably. And then cryptocurrency exchanges are very, very popular. The biggest, Coinbase, Binance. They basically just connect buyers and sellers of different cryptocurrencies and facilitate their trades. So depending on what crypto they're trying to sell depends. There's certain that some people favor, or the functionality is better, or I guess it's just a preference thing, why some use one bank and not another, and so forth. All right, the next one is mobile payments. I've worked quite a lot with a fintech startup that is very focused on payments. So this is a very exciting space for us. Mobile money within itself is just really a pay-as-you-go sort of digital medium of exchange, or a way to store value. It's facilitated by a network of mobile money agents. Mobile payments are a subcategory of the mobile financial services industry. So they are usually offered by mobile network operators, or MNOs, if you hear that thrown around, or other entities that partner with MNOs. The exciting part about mobile money is that users do not need to have a bank account. So this is really great for something like financial inclusion, for people who, for whatever reason, don't have a bank account. Particularly popular in low to medium income areas. There's been widespread use of it across Africa. M-Pesa is one of the most well-known mobile money solutions. So because of COVID, because of the pandemic, a lot of countries have been really working towards adopting measures to encourage the use of mobile money more and more. How a lot of them have done it is by cutting the transaction fees to as much as what they can, by increasing balance and transaction limits, and trying to ease the KYC onboarding process, however they decided, however they proceed in that way. I couldn't find the latest stats, but in 2019, approximately $2 billion was being transacted on a daily basis using mobile money. I can quite safely presume, I think, that it has escalated because of COVID, because of lockdowns, people not being able to get into cities, especially in more rural areas. All right, the next industry that tech has really taken by storm is insurance. Especially your car household insurance. There's a really cool company that I think is amazing. It's called Tractable, and they use AI to assess the damages and estimate repairs of costs of cars after motor vehicle accidents in real time. So it speeds up the claiming time massively. So basically the user would be in a car accident, they would take a photo using the app, and the AI will assess what the estimated damages are and the cost of those repairs. So that's really nice. And then another area of disruption has been robo-advising and stock trading apps. So this is an exciting space for the asset managers. These are algorithm-based assets recommendations and portfolio management. It's really been amazing. It's increased efficiency, it's lowered costs. There's very little human interference and is often much more inexpensive. So they say that a robo-advisor's annual fee is normally around 0.2 to 0.5% of the client's total account balance. And where your normal human standard financial planner would charge around 1 to 2%, and then there would still be commissions up and above that. So the other aspect that makes robo-advisors really attractive is because they're so accessible, because as long as you have an internet access, the user is able to have a look at their account 24/7, as long as they have an internet connection. And usually you can start an account with a lot lower amount than you would with the traditional financial planner. So that is just another area. There is a popular management app that's called Betterment, and it says that there is no account minimum at all. They use their technology to assist clients with savings, investments, retirements, and to reach their financial goals. So how it normally works is that a client would log on to the app, they fill out a questionnaire so that there's certain information that they take, and then advice would be given. Advising would be going backwards and forth based on certain AI. So obviously you can see there's a variety of different places that things are changing, and it's very exciting. And some are obviously shrouded in skepticism. People are worried, for example, some people won't use robo-advisors because they don't know how accurate and what if it malfunctions. But currently there is traction in all of these areas. So I thought those were really nice ones to focus on. So the world has changed, I mean, particularly in the last year, and specifically for financial services. This has changed because us as customers, our behavior has changed, and technology is just rapidly changing. So if you think how easy it is now for you just to access your bank account, buy something online, make a quick payment, this is what clients want. Clients want things that happen quickly. Clients want more. So why do they want more? Because there was dissatisfaction often with older services in the financial sector. So people, the old way of doing banking, people don't want that anymore. We now have lower barriers to entry. So it's easier for people nowadays to open bank accounts than it used to be. There are new currencies, which is exciting. There's new credit systems on offer. There's affordable infrastructure. There's like I said, there's been a change in our behavior because of the increase of online purchasing and payments. It's like a practical example is I'm renovating a house and I've nearly bought all my light fittings, for example, online, just a quick payment, and it's taken me 5 minutes from my lounge. I mean, it's just that, that has completely changed the whole game for so many people. And those, for example, light fitting companies they didn't have e-commerce sites before. So there's a lot of changes that are going on. There's also business needs are changing. So SMEs are wanting to access more funding. SMEs are one of the biggest employment providers. And most of the time they struggle the most to get funding. So it's really important to support SMEs. And that's why there's been a need for change. There's the rise of the digital native. I must say, I hate going to the bank, and from multiple surveys, they say young people hate going to the bank. They want everything. We like instant coffee. We want everything immediately. So the rise of the digital native has really changed that. Also, our time is really valuable. So for me, I sell time as part of my job, but we all, two working parents, for example, you don't want to go and stand in queues. You don't want to go and have to go through long process to do simple things. And then there's also been a rise of digital challenger banks. And the digital challenger banks are really exciting as well. They are usually smaller digital retail banks which compete with your traditional big banks and your big players. They basically leverage technology to streamline their processes. So they will usually specialize in certain areas. So a bank will have a lot of offerings. These digital challenger banks usually will be more specialized into certain areas. If you want to have a look at some, there's Starling, there's Monzo and N26. Because they're digital, they really don't have the same demands that the big financial institutions have, because there's obviously far less need for infrastructure and far less need for staff. One of the articles I read actually says that they need about 90% less staff to run a digital bank, which isn't good news for bankers, but in these spaces, that's how it's working. In 2016, Ernst & Young did a big report. They looked at what was important to customers. What did customers want from financial services? And they looked at 50,000 different consumers in 30 different countries to try and ascertain what the attitudes of customers were and how could banks and financial institutions improve. They found that customers just simply didn't trust old banking systems in terms of managing risk and providing unbiased financial advice. Often you feel like maybe what they're telling me to do with my money is more in their interest than in mine. So there's a skepticism. They also found that a lot of customers complained that the banks don't understand their personalized needs. There's no personalization anymore. Customers also bank branches and they need simpler products. So customers' top priorities that they identified from the report was that they want to be rewarded. So customers want to be rewarded for giving that particular institution its business. They want to have access, so anytime access. I want to be able to log onto my phone at any time of the day and night and be able to know my bank balance, my payments, if a suspicious transaction went off, who was that to, when did it happen? There was also a call for personalization. Customers want to be seen as a person. I mean, years back, people would walk in and the bank branch manager would know you. Then we moved away from that because of infrastructure, really. The focus changed. But customers want to see and have an experience that they feel is personalized to them. They want to be given advice on wealth building. So they want to know, what wealth building for one person will be different for others. So they want that personalized advice as well. And a lot said they want to know what they are spending their money on and where they could possibly save. So I've seen on a few bank accounts, they'll have like a pie chart with a breakdown of what percentages are being spent on certain things. I know that that's with my bank account. I have that pie chart as well, and it will say 20% was spent on car expenses such as petrol or whatever. And that's what customers are looking for. So it's really important when you're considering, so say, for example, you're unsatisfied with your current bank and you're looking at moving somewhere else, for example, it's important to think what your priorities are. So fintech, the solutions around fintech should always be about finding a solution for the customer. The customer has to be that central focus at all time. If you are creating an app that's amazing or a product that is amazing, but it's not customer focused and a customer is not going to be able to practically use it, then it's pointless. So that is very, very important. So I keep talking about fintechs and financial institutions as two separate entities, which for a long time, the narrative behind it was very much us versus them. So fintechs were coming in and saying, we can provide better solutions than the bank. And there was almost like good versus evil, us versus them. But this narrative has really changed, probably more so even between different parties. The competition has really, people are starting to see more and more the value of collaboration. And true disruption comes from this collaboration. So what many have found is that the us versus them didn't work, because soon we realized that us, well, we have certain weaknesses, but we're strong in other aspects. And them, well, they also have their strengths and weaknesses. And often those where the one is weak, the other is strong, which is where the collaboration really comes in. It even works like that between two fintech startups, for example, that end up doing partnerships or deals together because one has already gotten something right that the other one needs, or vice versa, and you work together. So that same Ernst & Young report I referred to earlier basically says banks have many innovative ideas. The challenge is validating which to actively pursue and embedding that technology. The complexity, scale, and siloed nature of banks means that they often struggle to do this efficiently. Unfortunately, I mean, this is from a few years back, but it is still as applicable today. So institutions know where they are weak. They decide to collaborate on it. But what is really important, and especially if you are listening in on this and you are from an institution like a financial institution or any institution that has a need or a desire to follow a more innovative path, is step number one is you have to decide what kind of innovation or innovative model you really want to follow. And you do this by thinking of what the purpose is, what the scope, what your goals are with the innovation. Is it to provide a better customer service? Is it to prevent clients from having to come in to see you? Whatever that is, you need to identify it, and you need to identify your mandate. So this is particularly important, heads of innovation for banks. They need to know where they're wanting to go. And then once you have a clear idea of what model you want to follow and what goals you have, then you can start to look for partners who can possibly collaborate and work together with them. So like I said earlier, there's this us versus them, and the financial institutions, they have strengths and they have weaknesses. Their strengths is that they are trusted. If your bank tells you to do something, most people, they trust the brand, they accept what the bank says because it's a regulated institution, and we just have an inherent trust. They have an existing customer base, which is huge because they've already got customers to sell to. They usually have access to resources for funding as well. They're already regulated and compliant. They have processes and procedures in place for your AML and KYC. So you'll know your customers, and anti-money laundering procedures are already in place. And they also provide a broad customer service offering. So I can go to one bank and get car loan, house loan, check account, credit card. But the weaknesses when these institutions want to really adopt innovation is that because of the legacy systems and the bureaucratic nature of things within a bank, there's often very slow decision-making process. So I'm sure there will be fintechs that will confirm this with me too. You go into a meeting with the head of innovation, you've got something really exciting, they love it. They then have to take it to another committee that takes it to another committee that takes it to another committee. And in a space where things are changing so rapidly, you know, you want to get on board, you want to get things going. So that is a weakness. Also, obviously, banks are financial service providers. Their focus is financial services. So often they have weaknesses in their technological skills, and their tech teams aren't necessarily the strongest in certain aspects. They've got slow adaptation to clients' needs. So if you go to a big bank and you say, I need this, it would be a long time before they could even, if it ever went anywhere, for them to possibly change that. And then every product that a financial institution puts into place normally has some sort of product life cycle. So they would want to have it around for a certain amount of time before they would abandon it. So, you know, things are a lot slower. Your fintechs, there's also obviously their weaknesses and their strengths. Their strengths are that they're innovative. So they come up with cutting edge solutions. They are most of the time market leaders, you know, identifying issues and finding innovative solutions. You've got really rapid decision-making process. So you can pivot really quickly. If you're doing something and it's not working, you can say, okay, well, all right, now we need to change, we need to move. Usually, fintechs are much more customer focused, and they can react to the client's needs if there's complaints, and they usually are much more product specific. So you would get like a lending app or a payments app, where the bank would obviously have that much broader offering. But their strength in that they're product specific is that they become very niched and experts on what they're doing. Their weaknesses is that they have a lack of customers, and it's difficult to get traction. I mean, any fintech, this is why there's so many that fail. So many will tell you it's so difficult to get traction. Often there's also limited skills because you don't have a lot of money. Lots of fintechs will tell you, or tech companies, or any startup in any industry will tell you, you know, often the founder and a small team of people are having to wear multiple hats during the day. They're having to do marketing, they're trying to do sales, they are trying to develop, which is a weakness. It's also difficult to get funding, because what I talk about here is the egg and the chicken situation, because in order to get funding, you need to have customers. And in order to get customers, you need funding. So there's often this like push and pull to try, and for a lot of businesses to try and get that necessary traction that they want. So some examples really of how just on every day already banks and fintechs are working together. You've got like chat bots. You get a lot of tech companies end up helping banks with developing better banking apps with fraud detection, and then also the biometric security stuff. There's a lot of growth with that. So this is just a nice summary of really the customer bases. You see where the one is weak, the other is strong. So that really just cements home this need for collaboration. So collaboration between institutions and players in the ecosystem is crucial to build the best solutions. So not even, you know, what the Mauritius African Fintech Hub is doing is absolutely amazing, because they have created a formal ecosystem where there can be formal collaboration between startups, academia, government, regulators, banks, and that's where you're going to find the most productive solution. So again, at all times, the customers need to, all parties, your financial institutions and your fintechs, need to keep the customer at the center of it all and not get lost off of that. Okay, for institutions, so this is particularly to the people that are signing in that work for banks or in innovative spaces of any sort. There's certain steps. Obviously, this is also like could be a whole separate course, but there's certain steps that institutions need to take to ensure that they can successfully collaborate, either with other institutions or with fintechs, or however, just to grow their innovation. Remember that everyone has to constantly be growing to remain relevant, because if you gave the same offerings that you gave from a bank 20 years ago, you wouldn't be around anymore. You know, there has to be more exciting ways of doing things. So the starting point really is to create a framework, which is which I mentioned earlier about that innovation model. But you need to develop some sort of fintech framework that rewards innovation, try and encourage innovation. A lot of the banks are doing that. They've got like hackathons and things that happen within the banks to try and get external parties to try and, get. I know that at some of I dealt with a client who was working for a bank overseas. He basically explained to me that, so he is incentivized to go and look for new and exciting solutions for the bank, just as a member of the bank. And if it was something that eventually gets adopted, he gets a huge bonus. So that's how some of the institutions are doing things, but you really need to have a clear understanding of that framework. It needs to be driven from the top. Often you speak to heads of innovation, for example, that are really excited about new opportunities. They are forward thinking, and then when it gets to the top's not on the same page. So everyone needs to be working together. You need to define the guidelines so people know what they are doing and why, especially when you are rewarding innovation, like what type of products, you have clear guidelines for what type of products you're looking for, and create accountability. So ensure that everyone on the teams, for example, are going out actively looking, but also representing correctly. So you then need to establish your innovation operating model, which you need to choose what model suits the company or the institution that you're working with. You need to find a model that connects your new ideas to the business, because you want to promote innovation, but you also need to obviously be cognizant of all time of the risks that are involved. So there's 3 generalized approaches of the model. Some will centralize, so they will employ people into the business or into the bank, for example, to create innovation. So you'll have innovation departments, or they'll decentralize it, and then they will basically go out and look for startups or academia or attorneys to write opinions, whatever it is, on like the best way forward for their innovation, to consider risks, etc. Or there's a hybrid approach where they'd have like an internal innovation tech team who would then maybe have an incubator, and then people would be brought in through the incubator or something like that. It's very important when you are considering this collaboration that you very seriously consider the pros and the cons to relating to any engagement strategy. What is the best way? If we do this, could this not maybe get to a competitor? So it's important for the risks and the cons to be considered. And then you've got to manage talent. So this is really where it comes to staffing. Talent needs to be really well managed within the organization. It may mean that you need to let staff go to employ more suitable staff. It might mean upskilling your existing staff. You need to manage your best, and you must, when you are looking at this, there's, for all the time, it's very, very important that you must understand that all innovation, even though it's rapidly changing, it's not going to be an overnight success. There needs to be some multi-year commitments to it. So this is also from that Ernst & Young report, which was called Unleashing the Potential of Fintech in Banking from 2017. I thought it was just a really nice way of looking at different ways that people bring in ideas into an institution. So, there'll be reviews and feasibilities and capabilities. Sometimes this will come from regulators or vendors. Then you'll have internal business units in the institution. So that's what adoption can look like. For fintech, so this is now speaking to any startups and businesses on this talk about what you need to do to prepare for collaboration. So if you are wanting to go out and pitch to institutions, these are what they identify really as your main key steps, all right? You need to articulate your value proposition. So this sounds really simple, but a lot of the time people can't actually, they can tell you what they're doing in terms of the tech, but this is where you need to come up with a nice story. Why are you doing this? Is like your elevator pitch. Why your app? You need to know who you are, what you're wanting to be, like who are your, what is the problem that you're trying to solve. You need to communicate that also in a language that your buyer understands. So for example, if you are wanting to collaborate with a bank, you will need to make sure that when you're talking to the bank that you are communicating in a language that they understand in a professional way. But if you were, for example, speaking to a client or another fintech partner, you may be more colloquial or use more simple language. So you need to really establish your communication. Regulatory prowess. So not all fintechs need to be regulated, but you need to know if you do or you don't. As an attorney, I often have to have phone calls with people when the horse is already out the stable. It's better just to deal with the things when you start. Legal is not always the place to save the money on when you are starting with a business, but you need to understand if you need to be regulated or not, and you need to understand the laws and the regulations where you are registered, but also where your customers and your clients are going to be, or your partners. And you need to keep abreast of that because things are constantly changing. At all times, you need to maintain integrity, and the role of the regulator is really, really crucial and important. Often people have this whole fear based towards the regulator. What if they try to shut us down, blah, blah, blah. But collaborating with the regulator is essential, and another great part of the of MAFH is helping that collaboration work. Then there's also prep and networking. So if you are a fintech and you're trying to get investment, you're trying to get your word out there, there's no point in sitting at your desk the whole time. You need to be out there meeting heads of innovation, understanding that you're meeting with the right people. You need to understand corporate venture vehicles. So how, if you do an investment, how's it going to be done? You need to align with suitable advisors, influencers, whatever it takes. You're not gonna sell your product from behind your desk. You need to be out networking, LinkedIn, etc. And you need to be prepared, because at any time you may, so many business deals are done on the golf course, for example. So at any time you need to make sure that you know your value proposition, you know your story, you know your numbers. I mean, I'm obsessed with Shark Tank and Dragon's Den. I watch it. That's my relaxed time. And they always say basics 101 is know your numbers. All right. And that really comes into your robust business case, which is the last one, where, as a fintech, you really need to have a very, very strong use case. So like I said before, it doesn't help if you've got something really awesome and cool and it works really nicely, but if there's no use for it, then it's pointless. If you're going to be speaking to banks or investors, you need to know the return of investment. So if you want $1 million, how are you going to pay that $1 million back? And how are you proposing that those payback periods work? Never make assumptions. Know your numbers. You need to have clear pricing strategies. So you need to understand, I'm going to sell it for this, it costs me for that. I mean, that's the basis of any business. If I wanted to run a tuck shop, I would need to know my pricing strategy. So I'm going to buy a suite for ₹1. I'm going to have a 25% increase on that. That will cover whatever costs I have, and I will sell it for, sell it on. So, and then while you're doing all this, you need to be cognizant of the fact that you will often be speaking to competitors, etc. And while you're networking in that, it's also important to protect your IP. So there's a very fine balance to get there between sharing what you're doing. And this is where knowing your value proposition comes in. Because if you have IP and it's not protected in a certain way, and you go and tell someone an idea of where you want them to move, and they end up taking over that idea, or, I mean, can you imagine the devastation of sharing your idea to a head of innovation and then they just do it internally? So there is that fine balance to get. So for those that want collaborative success between themselves and institutions and other fintechs and other businesses, you really need to embed into the ecosystem. You need to be agile. Agile is a word that's thrown around quite a lot, but you really need to be agile and quick to move. you also need to think of how collaboration can reduce costs that are associated with innovation. So this comes up often where someone, could possibly just collaborate with, so for example, two startups, one may have already achieved something and the other one needs those services. It's easier to rather collaborate in certain instances with the one that's already gotten it right. And then you can focus on getting your product to market quicker rather than trying to reinvent the wheel when the wheel's been invented, and you could work with the person who's already got the wheel and get the car rolling much quicker. Working together it usually ends up giving a better client experience, and be responsible when you're working in a collaboration with someone else. So a nice little saying, build better ecosystems rather than bigger banks. Okay, so obviously I've spoken about the infrastructure and how that practically works in action. There's also a really good feel-good side to tech, to fintech. If like me, I'm inherently a little bit of a hippie, I guess I'm a bit of a social democrat. Like, I really believe in, it's not just about profits, it's about people too. And fintech is really, through fintech, there's been a massive side consequence of it, which is financial inclusion, which has still got a long way to go, but has been really amazing because of the increased use of the internet, reduced costs of smartphones, things like the invention of mobile money. People are able to access financial services a lot easier and a lot quicker. There's been a lot of focus on sub-Saharan Africa in this, and looking sort of at the impact of increasing banking services to the under or the unbanked. So basically, an unbanked person is when there is no one in a household that has a bank account or any access to financial services. And underbanked is when you have bank accounts, but then still rely on alternative financial services. So for example, in Zimbabwe, people still rely a lot on sending money via the taxi and bus system from across borders, for example, to South Africa, just because they don't have access to those easy remittances or cheaper remittances, so they use those. So those would be underbanked people. This is not a developing world problem. Apparently, it still affects 25% of households in America that are underbanked. So, this is something that increased fintech is really going to help solve. So there's been real impact. These are three little stories, basically, I'd like to share. Basically, in Kenya, there was an institution that helped women basically get, and business people get mobile banking solutions easier. And a principal from like a really rural area spoke about how it impacted because previously every week she used to have to go from a rural area on a bus to the city to go and make deposits, make payments. And now she avoids having to spend the cost or the time of long travels via taxi to be able to do that because of technology. In Bangladesh, there was institutions that started helping with financial inclusion for factory workers. Factory workers on Fridays used to be paid used to be paid their wages, so they would be carrying cash. And there was a very high rate of crime that used to wait around the factories to mug people. Now, those factories are paying their staff via mobile payments, and that has reduced the crime rate there. And then women, particularly in certain parts of Africa, have not had access to their own financial services, and now are able to do so because of mobile banking. But it's really important. What's been identified is this financial literacy. So there is a potential dark side to inclusion. So, being able to loan money is great, but if you don't understand the consequences of loaning that money and the consequences of not paying it back, that can have very dire consequences for people. So it is important that there is a drive towards financial literacy, and again, the customer experience. So when you are dealing with rural areas, etc., the customer experience, to make it easy and simple so that, it's easy to get by. So Mauritius, is Mauritius the perfect fintech hub? So Mauritius is still ranked #1 in Africa and 13th globally for ease of business. You've got no exchange control regulations, which is a big aspect. It's a gateway for business into Africa. There's really forward-thinking legislation and licenses. I have done summaries on those 2 licenses. So I have asked Lisa, if you are interested in not having to read all the legislation, there is outline I've done, and she'll send that on. So the sandbox license and the custody of digital assets license, and then there were certain tax incentives. Most have lapsed. I'm not certain if they've been extended. I couldn't find online. There were tax holidays for innovative businesses. And then there's often schemes that are run. What needs to change in Mauritius? 3 and a bit years of growing a fintech company. In Mauritius, these are what we found, was the accessibility of bank accounts. I still have this with clients that are wanting to set up fintech businesses in Mauritius, struggling to get bank accounts if they are dealing in certain technologies. So government saying one thing, the banks being a bit sticky on allowing those accounts. And sorry, this is also feedback from other practitioners, is the more transparent procedures around license applications, the open banking APIs for third parties. I believe that there is work being done on that. Support for local fintechs. This is always what upset me on a personal level, is when you speak to investors in Mauritius and they're investing into Africa, they're investing into South Africa, projects that are happening all around the continent, but not the local Mauritian startups are battling to find investment. So if there can be more investment into local fintechs, that would be great. And further grassroots adoption of digital payments. And then obviously the EU blacklisting has caused some complications for those, particularly in the payment space, that are working into Europe. So those are, but I know that everything that I've mentioned is being actively worked on. This was just basically, again, I did gush over FundKiss a little bit earlier, but it's really an amazing story to just show how fintechs working, on the ground in an innovative way. So finding a customer, finding their problem, which their problem was obtaining funding through traditional financial services providers, and then basically providing the platform for SMEs. Okay, so I did a very similar course to this at the beginning of last year in person at the Hub. It was before the pandemic. It was before I came on a simple holiday to South Africa and got stuck here. And we discussed all the exciting predictions for 2020. But I mean, let's be honest, last year we didn't foresee what was going to happen at all, which all played out because of the pandemic. It has, however, been a very exciting year for fintech growth and acceptance. Global lockdowns have really meant that customers shifted buying habits, and an avoidance of physical banking channels have, really grown the space. That graph, I think, is really good. So some of the highlights on the year back was collaboration and consolidation was really throughout the industry in 2020. There were some really massive deals that went down. I'm sure some of you will know about Visa and Plaid. Unfortunately, that deal has since fallen apart because of American regulators. But so instead of Visa now buying Plaid, the last I'd read is that they're going to still collaborate and work together. But there was also other big deals between MasterCard and Finicity. World Online bought its competitor called Ingenico. And then there was peer-to-peer lending, saw the Lending Club buy Radius Bank so that they could access cheaper funding. There was also increased retail and institutional interest in digital assets, or cryptocurrencies, which is also exciting. PayPal announced that it will allow its US clients to buy, sell, and hold digital assets, as well as use them in certain shops on their network. And Visa partnered with BlockFi for a Bitcoin rewards credit card. So that's really practically seeing that playing out. China has made steps forward into their own digital currency, which is really exciting. China is already a very largely cashless society. A lot of payments are made via WeChat Pay and Alipay. But the central bank started really seriously testing the concept in 2020 in Shenzhen, and then also looking at other, I think there were 3 other towns or cities that they've been testing the concept in, which is really exciting. Some of you will know Ripple got sued by the US Securities and Exchange Commission, so the SEC. The regulator basically alleged that their cryptocurrency known as XRP was an unregistered securities offering. From the latest update on a chat I had this morning is that apparently the Ripple is going ahead with that litigation. They're going to fight it. This is potentially a really ground-breaking legal matter that may happen. I think there was a settlement offer, but they've decided not to go ahead. Sorry, I do stand to be corrected on this. But if that does go ahead, that could set some serious precedent worldwide for how, how this can be dealt with. So that's quite exciting, even though it's but not so great for Ripple. I mean, expensive process. Some of these digital challenger banks did face a little bit of uncertainty just because a lot of issues with their next round of funding. I know Monzo had some issues with their next round of funding in the UK because of just the economic uncertainty around the pandemic. And then I chatted earlier and I couldn't find any further how far this has gone, but I believe that the Bank of Mauritius has got its centralized eKYC platform to facilitate identification, verification, and enhance its KYC controls. There was a tender put out for people to put proposals in. I did also find online a company called Shifty Pro, which is doing KYC in Mauritius. This is what they said on their website. So 2020 has definitely been an exciting year. The expected trends in fintech for the year ahead, obviously these are always just predictions. I read quite a lot of different industry leaders' opinions on this, and they all seem to be echoing the same, which has been the same trends really for a few years in a row, but they've said never before, like this coming year, will the customer be as important. It's customer, because 2/3 of all financial transactions are now done online. So customers are wanting better, quicker, smarter, faster, simpler ways of doing things. There's also really been a push towards this financial literacy. They're saying, fintechs have a responsibility to ensure that clients understand what they're doing when they are using their products. And they've also predicted massive surges in the use of AI, especially in your personal finance, robo-advisors, lending, and voice payments. So I don't use Alexa, but apparently Alexa will now track your utility bills. She'll send you payment reminders and compare your payments. And that's all because of the use of AI. So apparently with us, this is going to be the real surge area in 2021. So I found this statement and I thought it was really nice. Empowered customers become happier customers, and once they are invested, they will stay longer. So where do we still need more focus? Still APIs and open banking for sure. Financial institutions need to, assist in helping this for ease integration for different businesses and third parties. Regulation, so focus, there's a lot of talk in various countries about pending regulations. We've got that at the moment in South Africa with the FSCA looking at, the need for regulation of digital assets as another asset class. So, the more regulation, the more clarity, not necessarily more regulation, but the more clarity that we can obtain on things, it will ease doing business for sure, especially for fintechs, because it can be frustrating when there's uncertainty. And then always, of course, continued innovation. We constantly need new and exciting products and new and exciting things onto the market. So we cannot avoid the wave, but we can learn to surf it. So, even if you are worried about or skeptical, it's very, very important to learn more and understand that. And yeah, just want to thank you all so much for your time. I've really enjoyed it. I hope that you found it beneficial. As I said earlier, I will send on to Lisa some links of some interesting articles for your further reading if you're interested. But yeah, thank you so much for your time. Have a wonderful public holiday tomorrow. And yeah, see you soon.
I'd just like to sort of step in there and thank Lindsay so much for today's presentation, which I think has given this. You've covered a lot of ground in a very short amount of time. Fintech is it's a vast space. Money touches on all aspects of our lives, and the digitization of the way that we interact with money, therefore, has impacts and ramifications throughout everybody's lives. So I think today's been a whistle-stop tour through that, and we've covered a lot of ground. I hope that it's made things clearer for you. I would like to just say to everyone, there is still time to submit questions if anybody out there would like to ask Lindsay any questions. I think we have had one submitted question here.
Yeah, it's about the slides after the session. The session has been recorded. So Lisa, if you wouldn't mind just sharing where people can find the recorded version of it.
So this will be available on MAFH's website in due course. So we will be advertising that fact as soon as it's out once we've done the editing part, sorry. So to keep an eye on our social media, on our website, and it will go live shortly. We have had a question that maybe I could quickly address there regarding skills and qualifications that fintech companies look for when hiring. I mean, obviously this is, very much depends on the fintech. I think all companies looking for candidates with a range of different skill sets, everything from the sort of hard technical side of things through to kind of basic business strategy, compliance. They have legal teams, and then also let's not ignore the creative side as well, because all of these new apps and websites need UI and UX experts, they need graphic designers, they need content writers. So I think, if you're a student out there and you're interested in the fintech space, then I think, there's enormous opportunity in this area. Obviously the specific route depends on which area you're in. Are you on the technical side? Are you looking for these other opportunities? But I think that, coming at it from a sort of a startup perspective, I think there are also sort of the soft skills that are extremely important when making hiring decisions. Is that you really need people with the right mindset, especially if you're going to work in a startup environment. You've got to be flexible. Lindsay's already talked about agile work practices. I mean, you really need to be able to sort of turn on the wind with your ability to respond to changing situations. And that means you need to have a really open growth mindset. So I would say if you're a student out there, you're interested in this space, my biggest takeaway for you really is to maintain that growth mindset, is to always be upskilling, always be learning more, be coming to sessions like this. Please follow the Mauritius Africa FinTech Hub. We do offer a whole bunch of different courses over the year designed for members of the public and to help you navigate this new space. But I think really, listen to podcasts, read articles, stay in touch with what's happening in your space. If you're already employed in the banking and financial services sector, fintech is having huge impacts. It's going to continue to have impacts that are going to have ramifications potentially for your career over the next few years. And one of the ways in which you can rise to meet that challenge is really staying abreast of what's going on. So I just wanted to jump in there. If you don't mind, Lindsay.
No, and if I can maybe say as well, I think especially if you're a student and you can try and get an internship, even if it's for a few weeks or a few days in a startup, you know, there's a lot of glamorization, the Silicon Valley type stories of the startup, and it's super fun and it's all that. I think if you can get an idea of what it's like practically working in a startup, it can be a very frustrating space, very disheartening sometimes, but also getting that practical experience. So when you are seriously entering the job market and you do want to look, you know, obviously speak to whoever you're doing your internship with, even if it is for a week, just go and ask them if you can put them as a reference on your CV, or, you know, if they're contactable. I found that we worked with some students from one of the universities in Mauritius, and it was really beneficial, just even from just a general business perspective on like how, because if you're coming straight from a student environment, you don't have that corporate or corporate background. So, you know, if you're making suggestions to the founder on what chats group they should rather be using, depending on how that's addressed, it can be, you know, there's a lot to be said for learning practically on the ground. So and it's something we look for if we are working with other people, like what have you been doing?
Yeah,
so that's just and sense from us.
No, and I'm just going to add in there a little plug for the Mauritius Africa FinTech Hub. We have a new program, our Future FinTech Champions. So if there are students out there who are attending this session, who are currently enrolled in degrees in Mauritius that might have, you know, applicability to the fintech space. So maybe you're studying banking or financial services, or you're studying accounting, or you're studying something technical like computer science. Please do consider making an application to our Future FinTech Champions program. And this is really where we're going to be taking a cohort of students currently enrolled in courses around Mauritius, and then absorbing them into the into the MAFH ecosystem. So you will, you know, this is like an augmentation of your studies, where you will become able to attend all of our workshops, all of our talks, all of our different programs that we hold in the year. You will attend all of our networking events. You'll get to participate in the Africa FinTech Festival, which we'll be hosting this June. You get to participate in our regulatory roundtables. It's an enormous opportunity for anyone who's really seriously got an interest in building a career in the fintech space. So I do encourage you all to take a look at MAFH's website, specifically in our blog section. You'll see there's an article on the Future FinTech Champions program, and there's a link to the application form. And applications close on January the 31st, so you've just got a few days to get your applications in if you're interested.
Sorry, Elisa, just someone has asked if we could please share the link there. I unfortunately missed the session, so if you wouldn't mind just sharing that as well.
Yeah.
And if anyone has any questions down the way, you are more than welcome. MAFH does have my contact details. I'm on LinkedIn. Please don't hesitate to be in contact if you need any assistance with anything. So yeah, thank you very much for this opportunity, and thank you again for your time.
Yeah, and thank you to all for your participation this afternoon. I hope you found the session interesting. As Lindsay has just said, this is a recorded session. We will be making it available on our website as soon as we can, so do watch this space. And I'd like to just take this opportunity again to thank Lindsay for today's session and all of her wealth of knowledge of the space sharing with us. And if you'd like to reach out to Lindsay, we can of course put you in touch. So thank you so much, everybody. And I do look forward to seeing you again at another MAFH session in the next few weeks. So thank you.
Thank you. Thanks, everyone. Bye.
Bye-bye.